Hello everyone, this is Trader Stewie with you here with the artoftrading.net. I'm going to do a video today with you guys discussing how to trade pullback or dip buy into support trades. This is something I don't usually do very often, but ever since the market as I discussed in my previous video, ever since the market has gotten into a choppy, very choppy range over the last few weeks, I've turned into as a trader, our number one goal, folks, is to adapt to whatever a new market or a new market conditions offer. So our goal is, so you cannot always play breakout trades. It's just too easy. It would be too easy if every time breakout trades worked. The market does not give anybody any free lunch. So yeah, there's a time where breakout trades will work. There's a time when pullback trades will work. There's a time where shorting will work. There's a time where doing nothing is what's most recommended. Just sitting on the sidelines, having lots of cash and just waiting, being patient. So it just depends. Trading it's a very dynamic, it's a very dynamic thing. It's not like it's not just a cookie cutter, every day I'm gonna do the same thing over and over again and then expect to have good results. It's just that's not how it works. The market is always changing, and as traders, our job is to always adapt to whatever the new market looks like. So anyway, let's just get straight to it, guys. This is how we played this week. We played two trades, one in StarBucks and then one in TITN. Two trades that I want to talk about. These are pullback or dip support trades, like I like to call them. Dip buy or dip support, whatever you want to call them. The idea is pretty simple, guys. The idea is pretty simple. However, it takes a little bit of of practice and patience, to find the right setups. So here we go. Let's get started. First stock right here, guys. The first trade we did is StarBucks. SBUX. We played this one, for the reason, as many of you know, I like to get long stocks that have proven to me to be in a very strong uptrends. So when you want to play a dip support, you want to buy strong stocks as they pull back into areas of support. So what's an area of support? For example, for StarBucks, as you can see, guys, this is a 1 month or a 2 month chart of StarBucks, and as you can see, guys, over the last 2 months, StarBucks has made a nice, beautiful run. As you can see, it barely pulls back. So you can see how the red candles are very rare. So you can see here since March, February, March, April, you had a red candle here, and immediately buyers came in and took it higher. Look at that, for multiple days in a row. It pulled back for 2 days, tested the 10-day moving average, which is the red line here, 10-day moving average, pulled back for 2 days and then came back up again. It did it again here, pulled back for 2 days, and the pullbacks, I want you to notice, they're very subtle, they're very quick, they're very small, very shallow, and then new buyers come in and then take us higher in StarBucks. So you can see here, it started here, pulled back for 1 day, literally boom, the next day buyers came in, took it higher, made it run. So if you were waiting for a bigger dip, tough luck. It never happened for this one. So you just had to wait and wait and wait and wait. And look at that, guys. I mean, for me, I have no problem buying a stock, higher if it's making me convinced that this is a strong stock. I don't mind buying at higher prices and waiting for a confirmation that this stock is very strong and we need to get in, even if it requires us getting it at a higher price, that's fine, as long as I can pinpoint a good entry. I'm willing to wait for it as long as I have a good entry. You know what I mean? So you don't have to blindly chase something. Just wait for your turn. You will get your turn. You just have to wait for it to come. So as you can see here, guys, so it ran for a few days here in March, pulled back literally for 2 days. Look at the dip, guys. The peak here was at 56.55. It pulled back to 54.62. So literally less than $2. Pulled back, found support at the 10-day moving average, and quickly the very next day gaps up and then starts to run for a few more days. So as you can see here, it did it again. We pulled back to the 10-day moving average for 2 days in a row, and then came roaring back up here. Look, and look at this, guys. This is what I want you to pay attention to. This little box right over here is what caught my attention for this trade. Look at that, guys. So it pulled back 2 days in a row, hit the 10-day moving average, and the very next day gaps up and then runs big time here. Three strong candles in a row. But look at this, guys. Look at the volume on those candles. Look at that. Okay, as you can see here, one, two, three. Look at the volume. Look at the volume on this. Huge volume. It takes, you know, much higher than the last few days, few weeks. Volume came in, roaring higher. And look at this, guys. The stock gaps up on this day right here, and then obviously, you know, profit takers came in, knocked it down for 2 days in a row. And look at this, guys. This is where we stepped in right here at the arttrading.net. This is where the alert came in to buy Starbucks. You know, we had a very, very strong day in the market on this day. It was, I think the Dow Jones was up almost 200 points on this for this day here. However, Starbucks was down. But that did not scare me, because I saw that Starbucks had a very, very strong run on these days. You know, compared to the market was taking a beating while Starbucks was making a big run. So Starbucks deserved to take a little break here, even though the market, the S&P 500, Nasdaq, Dow Jones were all up on this day and on this day. Starbucks was down on those 2 days. It did not bother me, because it made such a strong run. It deserved a break. You know, not every stock needs to follow exactly what the market is doing. That's just too easy. That's not how it works, you know. So anyway, check this out, guys. It pulled back. Look at this right here. That 58.50, 58.47, 58.40 area, it broke out right here on this. This was the high right here, and we broke it on this candle right here. A nice, convincing, strong candle, strong breakout, huge volume. So to me, this now was resistance on this candle. Now it became support. Okay, so this is where we stepped in. Even though, remember, the Dow Jones was up big on that day, we entered it as it pulled back to horizontal support line here, retest of the breakout. So it broke out here at 48.50 area. It broke out, pulled back. Now it's retesting both the support line and the 10-day moving average. So to me, this is double confirmation. And look at this, guys. It's holding. As you can see here, it held it. It closed at 58.66. The 10-day moving average is at 58.64. So literally, you're talking about 2 pennies. It held it by 2 pennies. The breakout was 58.50. Look at this, guys. It closed at 58.60. That was the area it needed to hold, and it held it. So to me, that was a good place to enter. And we entered Starbucks. This is the 10-minute chart now. I want to just pinpoint the entry. This was the 10-minute chart. We bought Starbucks around right here. This is where we entered the alert. It was around 58, the 58.70 area, 58.75 area. We used the 58.10, so we used the low of the day as a stop loss. This is the 10-minute chart. We entered on a breakout above, you know, this. Look at this, guys. We had a high here intraday on April 17th. We had a high here intraday, and then the stock pulled back briefly, and then made another high here intraday, and it pulled back briefly, and then we entered on a breakout above these candles right here. These 2 candles, we entered on a breakout above these candles here. So you can see, guys, the stock made a little run, and then look, late day it kind of pulled back, but the pullback, it wasn't an aggressive pullback. It still held the intraday support, which was the low of the day. So to me, that was my support line, the 58.10 area, the low of the day. That was my stop loss. We entered around the 58.70 area, and then the very next day, guys, this is the 10-minute chart. The very next day, we see a gap up in Starbucks. Now, I want to remind you that the stock market, the general market, was flat to down on that day. I think it was the Dow Jones actually the very next day went down about 70, 80 points. So right away we had relative strength in Starbucks. The market was down big on this day right here. Starbucks was up So that told me that we might have a winner here. Okay, so don't be in a rush to sell it. It's telling you, hey, I'm showing you strength on a big down day in the market. Consider holding me a little bit longer. This is what the stock was telling me at that point. So right away, stock gaps up, makes a big, beautiful run here on a 10-minute chart. Right away, we start raising stops. Market is down. The last thing you want to see is a stock gap up. You're making nice gains on it or decent gains, and then all of a sudden it reverses back on you because the market's weak, and then now you're sitting on a loss when you had a decent gain to begin with. So you don't want to give back any gains, guys. You don't want to lose your discipline, get greedy. Think about the dollar signs. Just focus on the trade, the price, and just go with that. Don't focus about how much money you're gonna make or how much money you're gonna lose. Stay objective. Watch the price action. That's all you need to do. So forget about the profits you're gonna make, or because the minute you start thinking about profits and stuff like that, then you're gonna start becoming emotional. Okay, and that's the last thing you need in your trading, is to bring in your human emotions into each trade. Otherwise, you're gonna be in for a very, very long trade, and it's gonna be a very painful one too, I might add. But as you can see here, guys, it started to run. As it kept running, we sold half around right here, and it kept running, and we sold half, I think around 60. My price target was 60. We bought it at 58, 70 area. My price target was 60. I exited all my trade around 60, and most of the subscribers exited around 60. So that was a quick, good, trade. We held it overnight. It was a nice swing trade. This is what it looked like, guys, the very next day. So we bought after two red candle pullback into support on the 10-day moving average, and horizontal support here on the breakout retest. The very next day gaps up, makes a run. It was up almost 3%. This is what we sold it for. A good 2.5, 3% gain. Not bad given the fact that the Dow Jones, where the market, was down almost 1% on the day, on a day where Starbucks was up almost 3. So right away I told people, take profits, book those gains. Right now we're in a very, very choppy market. This is as you can see here, this is a 60-minute chart of the S&P 500. As you can see, guys, we sell off and then quickly, gap up and make a run, sell off again, gap up, make a run, sell off again, gap. This is a very, very choppy market. These are very difficult markets to trade in. If a market that just goes straight down several days in a row, these are good markets. These are trending markets. You can stay short. Or a market that keeps running for several days in a row. These are good markets to be long, because however, markets that go sideways, up and down, up and down, up and down, these are the worst kind of markets to trade in, because they're so frustrating, because there's no follow through. Stocks don't follow through. So you have a breakout that fails, you have a breakdown that fails and reverses back on you, and back and forth, you're trading, you're in and out, you're racking up commissions, you're racking up small losses. Death by a thousand paper cuts is what people say. People call them. So just be careful. Less is more. The less you do in a choppy market, the better. My preferred strategy in a choppy market is to buy strong stocks like Starbucks. Buy strong stocks in Starbucks when the market is down, when the market is pulling back, when the market, you know what I mean. So take advantage of this weakness, buy it into obvious, into logical places of support. Have stop losses in place in case the trade busts. And and just buy strong stocks when they dip. This is my strategy in a choppy market. Rather than chase Starbucks all the way up here and be reckless, wait. Have the patience to wait. It will pull back. Every single stock will pull back at some point. Even the strongest stocks will eventually pull back. So you just have to have the patience to wait for the proper setup to come to you. Okay, so just have the discipline to just have that trade come to you. When the trade comes to you, have the composure, the confidence to take it. Know in advance where you're gonna buy it. Know in advance where you're gonna get out in case it doesn't work. Know in advance where you're gonna get out in case it works. So in Starbucks case, we came in at 58.70. We bought it here on a breakout above the highs of on the intraday candles of these candles here. The stock made a decent run intraday. It closed kind of poorly, but it still stayed above our stop loss. So there was no reason to panic sell it. it was only a 1% stop loss. You risked 1%. You sold it the next day for a 3% gain. So I hope this helps, guys. This is how I trade pullbacks into support, in choppy markets. So pullbacks into dip buying into support in choppy markets. Strong stocks, buy them on pullbacks into obvious support, sell them on strength. Buy them on weakness, sell them on strength. All right, guys. I hope this helps, and I'll do one more video here pretty soon. Thank you for listening.